So good morning students, welcome back to my channel. Okay, so as I am doing hire purchase system, okay, so today in my last class, okay, yesterday I could not publish any video. Okay, so in my last class what did I do? I have done sum on annuity. Okay, okay, a problem on annuity from B.B.Dam book. So annuity is a very important topic. Okay, you have to solve it. Okay, I have done one sum. Okay, and today I am going to do another two sums. Okay, so just see illustration number 12. Okay, 12 from B.B.Dam book. From B.B.Dam book. Okay, so B.B.Dam book is published under Guwahati University. Okay, and it is very much helpful. Okay, you can follow this book. You see illustration number 12. What is said? On 1/4/2016, that is April 2016, Hind Motors Limited sold a lorry on hire purchase basis to Everest Road Transport Limited. So here Hind Motors Limited is the hire vendor and Everest Road Transport Limited is the hire purchaser. The cash price of which is rupees 75,600. So cash price of the asset is given, it is 75,600. The amount along with interest at 10% on the unpaid price was payable in 5 equal annual installments commencing from 31st/3/2017. So there are 5 installments. Okay, in this case, in this sum, there are 5 installments. You have to calculate the interest, okay, for 5 years. Okay, for 5 years. So you see, and the value of each installment is same. The value of each installment is same. Okay, present value of an annuity of ₹1 for 5 years at 10% is ₹3.78. So present value means what? As I have said in my last lecture, present value means what? It is the cash price. Okay, it is the cash price of the asset. So present value is how much? 3.78 of annuity of ₹1. Okay, that means when the installment value, annuity I have said yes or no, payment to be made at regular intervals. Okay, so here annuity installment values are considered as annuities because installments are paid at regular intervals. Okay, so annuity of ₹1, when annuity of ₹1, the cash price, that is the present value, is 3.78. Okay, 3.78. Now, when the cash price is this one, 75,600, what will be the value of installment? Because installment value is not given in this sum. Yes or no? Installment value is not given in this sum. You have to take it out. Okay, so that can be done or that is done in this sum, okay, by considering the annuity value. Okay, annuity value. So you just see calculation of installment value. Okay, present value, that is the cash price, and this is installment value. So when present value, that is cash price, is ₹3.78, installment value is how much? 1. Okay, so when the present value, that is cash price, is 75,600, okay, 75,600, what will be the installment value? Okay, so that we have written as x. This figure is to be taken out. So this is x. So installment value x equals to, you see, when it is 3.78, it is 1. So Next, when it is 1, it will be 1 by 3.78, right? And when it is 75,600, okay, it will be 1 divided by 3.78 into 75,600. Okay, you have done problem sums. Okay, just as like that. Okay, you have to solve this sum. Okay, you have to take out the value of each installment. So when you calculate this, okay, solve this sum, okay, solve this calculation, okay, you get the figure as rupees 20,000. Okay, so 20,000 is the value of each installment. There are 5 installments and 20,000 is the value of each installment. Okay, so since there is no matter of down payment in this sum, okay, there is no down payment. So you just have to write, okay, cash price of the asset 75,600, then add interest, okay, add interest, okay, on 75,600, okay, into 10%, that is 10 by 100. You take out the interest for the first year, okay, then less first installment. First installment is how much? 20,000. Then again with that you add up interest, okay, then less, okay, second installment, add interest, less third installment. Okay, so this is how you have to take out the interest charged each year. There are 5 years, okay, and I have done interest calculation. You can see my previous videos, you can check out. Okay, I have done interest calculations very nicely. Okay, so that will be clear to you. Okay, so here no space also, and I want to do it by, okay, I want that you people do it by yourself. Okay, so the tough one, okay, the tough one in this sum I have explained you. Now calculation of interest part you have to do it by yourself. Okay, and you take out the amount of interest charged each year. There is no down payment in this question, just you have to write down the cash price of the asset. Okay, then on that you have to calculate 10% interest. Okay, then again you deduct the value of first installment, then again add interest less second installment. This is how you have to calculate the amount of interest charged each year. Okay, so I hope this sum is clear to you. It's very important. Okay, annuity, sums based on annuity. Okay, so now you come to illustration number 13. Okay, what is said in this question? On 1/1/2017, XY Limited sold a machine to Guwahati Industries on installment system. As per the agreement, Guwahati Industries will make payment including interest in 4 annual equal installments of rupees 27,225.64. So here the value of installments are given. The value of installments are given. Okay. Installments are given. The payment of first installment to begin from 1/1/2017. Okay, so here they are saying that the asset was, okay, sold on 1/1/2017, and the payment of first installment also will begin from 1/1/2017 of value this. XY Limited charged interest at the rate 6% per annum. So there is an interest, okay, of 6% per annum. Calculate the cash price of the machine. So here installment value is given, but the cash price is not given. So that you have to take out. So there is a note. The present value of rupees 1 paid at the beginning of each year for 4 years is rupees 3.6730. So here the present value, that is the cash price, is this. Okay, of installment value rupee 1. Okay, the present value is given this. Okay, that is the cash price of rupees 1. Rupees 1 is the installment value. So just you have to do the calculation for cash price. Okay. So you see calculation of cash price when installment value is 1, present value is this 3.6730. Okay, this is the installment value, this is the present value, that is the cash price. Okay, so when it is 1, it is 3.6730. Now when the installment value is this one, 27,225.64, at that time what will be the cash price? Okay, so therefore cash price X equals to this into this. When it is 1, it is this. When it is this, what will be the cash price? So it will be, okay, 3.6730 multiplied by, okay, 27225.64. Okay, so when you solve the this one, when you solve the figure, okay, you get the figure rupees 1 lakh. Okay, when you solve it, you get the figure rupees 1 lakh, which is approximate. Okay, this is not the actual figure. Okay, it's approximate. Something 9999 is coming. Okay, so it is taken as 1 lakh. Okay, so it is approximate figure. So what is the cash price of the machine then? It is 1 lakh. And nothing else has been asked to find out in this question. Only the cash price you have to take out. Cash price of the machine. So that is taken out by solving this. Okay, by following the annuity table. Okay, so no more calculations are there in this sum. Okay, but in this sum you have to calculate the amount of interest to be charged each year. Okay, that is only done in this sum. You please do it by yourself. Okay, so I hope these two sums are clear to you. Okay, and sums on annuity is clear. Okay, so if you like my video, please subscribe to my channel. And I have seen that in hire purchase system you all are just following my theories. Okay, so I have started with sums, and sums are also very important. Okay, you please see the videos on sums. Okay, and if you like my video, please subscribe to my channel and press the bell icon also for latest updates. Okay, so thank you for today.